There's always this quandary between single family versus multifamily. You were in the single family space. What made you decide to make that leap from single family to multifamily?
I knew multifamily had the economies of scale, as everybody talks about. If I have a duplex or a threeplex, one roof, right, one yard, it's a lot easier to deal with. One set of payments, one set of property taxes, or one set of insurance, and it's just more doors. So for me, switching to multifamily or making that leap to multifamily wasn't about me making that decision to do that. It was actually about me realizing how possible it was. Because my other mistake, probably one of my very first real estate mistakes, was a friend of mine had told me that his dream was to own a 50-unit apartment complex and retire. And
Hmm.
I thought, that's ridiculous. People don't own 50-unit complexes. And I didn't even bother looking into it. I didn't ask any questions, nothing. And
Hmm.
then I realized over time, oh my gosh, this is absolutely reasonable.
Reasonable.
It's
Yeah.
very, it's very realistic. This is actually what people are doing. And I think it's awesome. I love the idea of multifamily, especially large multifamily, because to me, as an engineer, the complex is like this giant machine where all the people are moving parts. And my job is to make sure that everybody has the best life, can move about efficiently, make sure the parking is done, looks good, that they're safe, that everything is clean, everything is stable. And
Mhm.
I enjoy that aspect of
Okay.
So being an engineer, and we have a lot of engineers as members that come through, and I do notice they lean on the analysis paralysis side of things. So any tips to our engineer members out there?
I think you need to have confidence in your ability
Mm-hmm.
and get past the fear. So in engineering, a lot of things that we do, we have to check, double check,
Mm-hmm.
give
Triple
somebody
check.
else, triple check, right? By giving them, do peer reviews. And it's the same process that you would use in an engineering design, you can use in multifamily.
Okay.
So look at your numbers, be confident in what you're doing, and then hand it off to somebody else, somebody with a little bit more experience, a second set of eyes, as we would say, to look it all over. And at that point in time, once everything checks out, you have to take that leap.
Yeah. There's no
Okay.
other choice. Yeah. It's either you do it or you don't.
Either you
Yeah.
do or you don't.
Yeah.
Right.
So what do you look for? Because we talk about the numbers. A lot of people just talk about the number of doors, 50 doors, so on and so forth. What are some of the numbers that you absolutely have to look for when doing your analysis for, a multifamily acquisition?
So as far as whether or not to purchase, if
Right.
we're talking about an investor perspective.
Yes.
So with multifamily, most of the time, not every time, but most of the time, you're going to have to get money from somewhere else. If, like me, you're able to buy something, your first deal by using your own money, eventually your own money will run out. So that
Mhm.
means you have to go to other people. So it's about being a fiduciary for your investors. So what I look at is, what would my investor, or what would I as an investor want out of this property? Okay. Or out of a particular investment. And so I'm looking at returns, and those returns can come in a variety of ways. So with multifamily, you can be paid multiple ways. We'll say you can be paid through cash on cash. Of course, after all your expenses, after your debt service, you're going to get cash at the end of the month. Another way is going to be at the sale of the property. You're
Mhm.
going to be able to recapture all that equity. Another way that you can gain money through multifamily investment is through taxes, of course, depreciation of your asset or accelerated depreciation. In most cases, people will do accelerated depreciation, which means you have less of a tax burden. Those are the primary ways that people will do it. Also, there's, so it's going to be income, cash, depreciation. There's going to be various earnings, and then depreciation, and then leverage. So some
Leverage.
people talk about leverage
Mhm.
as a possibility. But using all of these types of all these different ways to make money, I'm going to see what my investor return is going to be. And that's sort of how I start evaluating whether or not a deal is going to work for me. And the reason why is because if I can't convince myself that it's good for the investor, I can't convince an investor to invest with me.
Right.
right? And if somebody isn't willing to do that level of due diligence, then you really need to not be investing with
Mhm.
them.
Any tips for raising money?
For raising money, what I'm going to do is talk about myself as a person. I'm going to talk about my track record.
Mhm.
I'm going to talk about what I have done, what I have seen, what my experience in the market is, and then why I believe that a particular investment is going to perform in the way that I am projecting.
Yeah.
Right. Because I'm
Okay.
not predicting, I'm projecting. And so what then I'll do is I'll stress test that, that analysis, meaning I'll say, well, what happens if my numbers aren't where they are?
Mm-hmm.
How does that look for us? So I'll talk to all these different points with an investor and then, see where they're at. Also, the biggest thing when it comes to raising capital is understanding the pain points of the investor. So
True.
the type of investor that I relate with is the engineer or the professional. It's in their 40s, 50s, 60s, has a family, loves their job,
Mm-hmm.
is worried about their children's college education, worried about retirement, but doesn't want to spend time picking stock. You don't want to spend time giving somebody money that they don't even know who this person is. This person
Right.
has no relationship to them. So from an investor perspective, you want to make sure you establish that relationship with them.
Good stuff, man. So education wise, did you read any books? Did you take any classes, any mentors, or how'd you get all this multifamily information?
Right. So when I first started with multifamily, I actually was able to take down the 10 unit by myself just through my experience with single family.
Okay.
I
Okay.
was then I found a mentor with Rod Cleef,
Mhm.
and who is nationally known, I think,
I was just listening to him this morning on the way in.
it's a very large podcast, also a very large mentorship program.
Mm-hmm.
I was able to make a lot of contacts there. I learned best through talking to different people, sharing information, which is why I love doing the subgroup.
Mm-hmm.
I also found Vertical Street Ventures. They focus primarily in Phoenix, Tucson, Arizona, and then now a little bit in Dallas.
Okay.
Okay.
So I found those two mentorship programs and being able to make a lot of contacts, found a lot of partners, a lot of investors. And then I go to conferences. So I go to conferences and the information there is broad enough, but also specific enough that I'm learning a lot of information
Right.
and filling in all the gaps, talking to more people, also read books, a lot of online books,
Mhm.
a lot
Okay.
of podcasts.